Although it has been proven that the skyrocketing stock index and the instantaneous expansion of market value are not sustainable, whether it is a securities investment base, the number and scale of institutional investors such as gold, QFII, and QDII, as well as the billions of individual investors, as well as the financial asset equivalent that accounts for half of the stock market, and the degree of securitization of state-owned assets, all indicate that China's economy is undergoing sustainable and irreversible structural changes. The capital market is becoming one of the most important wealth management platforms for governments, enterprises, and individuals, and China is shifting from commodities. The era has entered an exciting era, the era of capital finance. In China's capital and finance sector experienced unprecedented explosive growth. WTH, the Shanghai Composite Index, has increased from multiple points, rising to a high point. The total market value of listed companies in the Shanghai and Shenzhen stock markets has experienced a fission growth, reaching trillion yuan, of which the market value of A shares is trillion yuan, becoming the largest emerging market and the fourth largest securities market in the world. The securitization rate of China's economy has continuously crossed the threshold of percent from percent a year ago, which is comparable to the level of the international mature market. A number of aircraft carriers, such as PetroChina, China Shenhua, China Co-Construction Bank, China Railway Group Limited, have achieved securitization through the issuance of new shares through IPO. A number of central armies, such as China Shipbuilding, Xi'an Aircraft International, and Dongfeng Electric Machinery, have realized securitization through overall listing. A large number of national team companies such as NFC, CNOOC Haishan, and Huadian Energy have realized securitization through. The root cause of asset price fluctuations from the end of the year to the month of major global capital markets, commodities, and real estate markets staged a rare bull market in history has occurred, with crude oil prices rising by %, copper prices rising by %, gold prices rising by %, and soybean prices rising by %. The correlation between financial markets and futures markets, as well as between domestic and international markets, has reached new heights in history. For a long time, the sharp rise and fall of asset prices in China have been related to policies. From the appearance of this surge, assets, the policy weight of price inflation remains significant, with energy prices, raw and auxiliary material prices strongly correlated with this economic cycle. Land prices are related to the long-term prosperity of the real estate market in this round, and the significant rise in the stock market is inseparable from policies. The National Development and Reform Commission has issued policies to directly intervene in coal prices, while the Central Bank and the Ministry of Land and Resources directly regulate the local economy. Therefore, people generally attribute the dispute over coal and electricity to policy distortion. and the rapid rise in prices is attributed to weak regulation. High housing prices are generally believed to be due to high land prices, while high land prices are also considered deliberate actions by local governments. But pushing asset price inflation entirely onto policies seems to be a myth, as policies can push up prices, but cannot maintain inflated prices, let alone long-term prosperity. From a direct perspective, having too much capital is the essence of this round of surge. Internationally, since the beginning of the year, the growth rate of global currency continues to be higher than %, even reaching %, while the world economic growth rate has been between %, and the gap between the two is widening. A large amount of international surplus money flows to developing countries, making China's money supply very large. In August, China's broad money supply balance was trillion yuan, an increase of % year-on-year, far higher than the economic growth rate. The main source of money supply is foreign exchange funds, and a large amount of international and domestic currency forms hot money. They launch attacks everywhere, causing turmoil in real estate and coal speculation groups, driving up asset prices. Therefore, the black hands behind this round of asset price surge are mainly too much funds. From a deeper analysis, the root cause of too much capital lies in China's market-oriented reform and globalization process. Firstly, in recent years, market-oriented reforms have accumulated a large amount of monetary funds. China's long-term development strategy of high accumulation and low consumption has accelerated the accumulation of monetary wealth. As of the end of the year, the RMB deposit balance of resident investment in recent years has been comparable to that of the United States, and the influx of various hot money has been countless, resulting in a large-scale surplus in China's international balance of payments capital account. Meanwhile, after joining the WTO, China's foreign trade has grown rapidly, and its trade surplus in recent years has also been very large. From this perspective, a large amount of international capital has entered China, leading to imported inflation. On the other hand, the prices of international raw materials, including crude oil, iron ore, etc., have skyrocketed, while China's large import of raw materials has directly introduced inflation from the import of raw materials. From the above, it can be seen that excessive currency has led to abnormal changes in asset prices and capital markets. But the current choice timing of the outbreak is related to many factors, and specific fields have specific reasons. The bottom consolidation of the Chinese stock market has been ongoing for a long time, with both negative and positive trends. It is reasonable for the stock market to erupt under external factors. It has been years since the stock market fell in, and this is definitely not a short period of time for a nascent market with only over a decade of stock age. The market accumulates energy in the callback time after time. The greater the pressure, the greater the rebound momentum. The substantial increase of money supply undoubtedly disturbs the stock market. making its energy released quickly. The climax of urbanization and the rise of consumption. With the economy, the rapid growth and large-scale urbanization construction have arrived, which has driven the rapid rise of the real estate market. Real estate not only drives up land prices, but also directly drives up the prices of raw materials, coal, steel, aluminum, wood, etc. The rise in consumption directly leads to the entry of commodities such as cars into ordinary people's homes, which in turn promotes an increase in oil consumption. In the situation where currency itself is already surplus, various concepts have emerged due to the disturbance of real demand, leading to abnormal asset prices. The dual-track system of market price and planned price, but a split strategy of opening prices while providing targeted subsidies. Although the relevant departments are still hanging on CPI and extremely sensitive to indicators, the use of administrative force to force down prices has gradually been falsified by the market, and all parties are forced to accept reality through market lessons. It will be a matter of time before prices are relaxed. But this is not to say that opening up is as simple as opening up. It requires the maturity of various conditions such as timing, policies, and situation. This will be a gradual process. Considering the affordability of society, relevant parties are likely to adjust the pace and speed of price liberalization with changes in the situation, giving society enough time and space to transform and digest. At the same time, liberalizing prices does not mean that the government will let go. Regulation can still affect prices, but the methods have changed. It is no longer administrative control, but indirectly affects prices by influencing market supply and demand, such as the rice bag, the Gettable Basket project, or price adjustment funds. So the crux of the problem lies not in opening up prices, but in how to maintain social stability. Looking at the impact of reform, the most likely impact is on the price-sensitive vulnerable groups. In order to stabilize people, ease hearts and promote reform, the government's bottom-up targeted subsidies may become a protective cushion for the gradual liberalization of resource prices in the future. This turns the key question to how to target subsidies, whether directly or indirectly. The reason why education reform and healthcare reform are in a dilemma is because relevant parties attempt to reduce the burden on the public through indirect subsidies from institutions, schools, hospitals, etc. The starting point is correct, but subsidy institutions are prone to rent-seeking and corrupt, but they cannot effectively compensate. Therefore, indirect compensation is better than direct compensation. The focus of future subsidies is likely to shift from subsidizing hospitals and schools to directly subsidizing patients, impoverished students, and the poor with quasi-currencies such as medical vouchers, education vouchers, and food vouchers. On the other hand, the operating mechanism of subsidies precisely involves the sensitive core of structural reform. Indirect compensation and direct compensation will originate from two different power operations. The former requires the separation of the linear functions of the administrative department from the powers directly under the state, while the latter requires research on the separation of decision-making and administrative execution. It is difficult to truly achieve separation in the short term. It may be a long-term trend towards future policy goals. Entertainment, under the pressure mobile of TV the situation, and online gaming competitions have emerged one after another. And even the Second Life allows people to live an alternative life, which is a product of young people's right-brainedness. Moreover, the right brain's counteraction and subversion of the left brain have already appeared. The separation of the real and virtual economy allows stock prices to no longer rely on physical performance but instead on imaginative space. Whoever has a good story can control expectations, and the stock price rises quickly. The emergence of Google culture, with its casual and entertaining work culture, calls for freedom to play and emphasizes entertainment. Feeling and wasting time correctly have instead become manifestations of efficiency. And such things precisely indicate the expansion of the development space of the right brain. Continuing like this, the focus of the future will clearly shift from left brain to right brain. But this does not mean left brain. The brain will be abandoned. Practice is the only criterion for testing truth, and science is the primary productive force are still unchanging truths. Left-handed thinking methods such as logic and calculation are still in use, but the variables that affect the situation increase, and factors interact with each other. In addition, the weight of uncertainty factors such as expectations increases. As reform enters the deep water zone, scientific and rational thinking frameworks are actually constrained. Jumping out of the frame with right brain thinking may be more practical. Therefore, the two tractive forces of the aging left brain and the youth right brain are likely to launch a tug of war, so that the problem is no longer a multiple choice that is either left or right, and the solution will also become the middle way of both left and right and neither left nor right. This shift in mindset will drive turbulence at all levels of society, rapidly pulling society into a new era of business opportunities. On the one hand, as the focus of future society shifts from the left brain to the right brain, from rationality to sensibility, from technology to emotion, from the switch from efficiency to satisfaction will also shift the requirements for goods from functionality to ethics, from usefulness to entertainment, from one-way to interactive, and from material to spiritual. This change is not perceived through abstract thinking or rigid mode operations, but rather through personal experience and self-exploration. Free trials, free tasting, interactive is for home appliances, and sample rooms are gradually making experiential consumption mainstream, and online experiential marketing has enabled the domestic trial customer base to exceed 3 million. The comprehensive emergence of the experience economy indicates that the